What is up everybody, welcome back to another stock market video, and today I'm going to be talking about 7 growth stocks that I could be looking to buy in April. March hasn't been a great month for stock gains, and one of the major reasons which has been spoken about in the media is that people are moving their money away from the volatility of the stock market to the 10-year treasury bonds. The recent sell-off in high growth stocks has also contributed as people have started to take profits and lock them in and therefore take some money out and become cash heavy over the next couple of months. Also constant talk about other people guessing when the next market crash will happen, along with hedge fund managers moving money around as they rotate it from growth to value stocks. This ultimately has started to show in my portfolio with a constant downtrend, and now I've lost some of the gains that I've gained in 2020. On the bright side, the prices have cooled off on some certain stocks to present some small buying opportunities ahead. Please hit like on the video as it massively helps the channel out, and if you're interested in investing, please hit subscribe. Otherwise, let's get on with the video. So the first stock we're going to talk about is Tesla, ticker symbol TSLA. Looking at the chart action, we can see the 52-week high hit an all-time of $900, and since the beginning of the year, from January, we can see it's been slowly declining by about 30%. Clicking on the month chart, we could see that it started to trade sideways, and I think in the lower 600s to 550 is starting to be a good buying opportunity. One of the major news of Tesla stock that stopped it, I think, from falling all the way down to $500 is the release of ARK's new price target for Tesla in 2025. To arrive to this forecast, ARK used a Monte Carlo model with 34 inputs, the high and low forecast incorporating 40,000 possible simulators. Our bull and bear case targets are the top and bottom quartile outcomes from the simulators as shown below. So the table is just a good summary for their predicted price, and the expected price value for Tesla stock in 2025 is $3,000. So their bear case scenario, which is the lowest possible case in 2021, is $1,500. The bear case scenario is about 2.5 times the amount that it is today. It's about $600 per share, but you got to remember that's also 4 years away. Another good summary of some of the assumptions they use. Now the report is actually pretty long, so I'm not going to go all over every single one of them. I have had a quick read of it, but this report is very transparent and they're showing you what they're expecting. Looking at this pie graph, we can really see the massive weight that it has on electric vehicle production and also the need for robo-taxis to be released by Tesla. Having a quick look at the conclusion, given the updates outlined in this blog, ARK's 2025 price targets for Tesla is $3,000. A very important note here, we did not model Tesla's utility energy storage or solar business into our models. We also have not modeled Bitcoin assumptions, so this is pretty key because the assumptions already don't include Tesla's energy storage or solar business, which is quite important and has been discussed that the solar and energy business will one day rival the electric car manufacturing business, so there's still a lot of upside to the stock. Moving on to our second stock is none other than Tattooed Chef, ticker symbol TTCF. And one of the things that alerted me to this stock is that Financial Education has been talking about it and doing a lot of videos on it recently. So if you don't know what Tattooed Chef is, it's a plant-based food company, produces and sells portfolio of frozen foods. There's a number of things that caught my eye with Tattooed Chef, and just reading here, trading at 28.5% below our estimated value on Simply Wall Street, revenue is forecasted to grow by 33.3% per year, and the earnings grew a massive 1,373 over the last year. So moving over to Yahoo Finance, in the statistics tab, there's a few metrics that I want to highlight with this company. So the biggest one is this profit margin, which is 45%, and also the quarterly revenue growth, which is at 47.7%. What's also attractive at this $18 to $19 price range is that we can see the 52-week low was at $10.30. The 52-week high was at $28.64, but also the 50-day moving average is $21 and the 200-day moving average is $21.44. So currently at $18 and $19 is lower than those two, which means that it's a pretty good buy at the moment if you're interested in this kind of stock. So I've just recently been starting to look and research into this company, and now one of the bad things about it is obviously their cash flow. For my research, I've seen some videos that they're going to be spending some money on advertising, and it's really going to impact some of their operating costs because they're starting to grow and branch out. One of the major highlights that I like to see is we can see their revenue is growing constantly year in, year out, and also their earnings are starting to follow with it, which tells me that they have a very popular product moving into the future. Moving into the third stock is SoFi, but it's currently at a holding company, so its ticker symbol is IPOE. So the stock has been slowly downtrending as expected, as it's been following the market from its all-time highs of $28 to now at about $16. The merger date has still not yet confirmed, so I don't see any movement in it. I do have a small position in them, but I just need to wait it out till they have a merger, and then I can see more of their financials to see if I'm going to invest more money into them. One of the recent pieces in news is that SoFi is to give amateur investors early access to IPOs, which traditionally hasn't been given to retail investors. The fourth stock that I've got is a very interesting one that I've recently come upon. It's called Atlas Crest Investment Corp, and it's also a SPAC, and they've yet to merge, so their ticker symbol is ACIC. So having a look at the charts, it's been a victim of hype. We can see that its 52-week high is $18.60, so it ramped up as the merger was confirmed, and we can see it come down, and then as the sell-off has happened in the downtrend, you can see it's just fallen by about 40%, which is quite significant, and it's currently now pretty much back to $10 of where it started. If you wanted to get into this stock before the actual price rise of anything happening, now is a pretty good time. Before we look into the actual company, which is called Archer, we're just going to have a look at the definition of the actual product that they are going to be producing, and that is called eVTOL. So it's an electric vehicle take-off and landing. So it's pretty much like Uber with wings in quadcopter form. Going over to their website, we can see that their mission statement is Archer's mission is to advance the benefits of sustainable air mobility. Critical to the mission is helping to fix the traffic problems within the cities and move to a fully renewable transportation solution. This is an undertaking that will require a tremendous amount of effort, and it will take decades for us to have a profound impact on the world. From that, you can already sense that this is early days. They're not commercially available right now. And reading on is Archer, a leader in the urban air mobility space, commercializing electric vehicle takeoff and landing. eVTOL Aircraft has announced a commitment to Miami as a flagship launch market by 2024. So if you're investing in this company, which is very interesting, the technology is still a little bit far away, and you'll need a lot of faith in waiting for this company to mature and to see how things go. There's going to be test flights, there's going to be all sorts of testing, there's also going to be compliance, and also the governance around all this. So if you're investing this early, it could be something really massive, but you don't really know, and it's all a risk being this far away. In the investor presentation, they're just showing one of their vehicles here. It looks quite good, but again, this is just a drawing, so I'm not going to go over the specifications because it's still pretty far away and still in prototype mode, but looks pretty nice. And again, some very good renderings of what it could turn out to be like. But as I say, this is still into the future and is about 3 years away. For my fifth stock, I've also found another one under the name EHang Holdings, ticker symbol EH. So reading here, EHang Holdings operates an autonomous aerial vehicle technology platform company in the People's Republic of China, Europe, North America, West Asia, and internationally. Some of the positive points to point out is that earnings are forecasted to grow 127% per year, and that revenue grew by 130% over the last year. Some of the risks highlighted is the high volatility in the share price over the last 3 months, and I'm going to talk about that very soon, and also shareholders have been diluted in the past year. So these guys are relatively low market cap at $2 billion, and financially they are well funded, meeting their short-term liabilities and long-term liabilities. Having a look at the price action of the 1 month chart, we can see that they started about $50 and been slowly downtrending as the market has sold off, and they're currently down by about 30%. But there is a different story when we go over to the 6 month chart, and you see they had quite a big peak here. So they were basically hovering at about $20, and then they continued to run up significantly and reach an all-time high of $129 to then crash back down by 71%, which is quite significant. Now, the main reason why this happened is because of this short seller report right here. So this short seller report was done by Wolfpack Research, quite an interesting name company, titled EHang, a stock promotion destined to crash and burn. So like all short seller reports, the main job is to actually bring the stock price down, which they've done quite well, along with a sell-off. So it hasn't been a good time for EHang. And in this report that I haven't fully read, basically it's just going to outline the shortcomings of the company, as it hasn't actually produced and commercially out yet, of all the assumptions that they make to inflate the stock price to what they actually have with regards to the potential addressable market when it does come out, and how those revenues and earnings are going to actually eventuate. So just going back to the stock chart, we can see that it hung around about this price, moving by about 10% for quite a long time, and we can see that it sharply went up to over 200% in just a matter of 2 weeks, which means that there was a lot of hype and a lot of FOMO going into the stock. But as always, when the prices rise this high, it's unnatural and eventually it has to come back down again, which it did. And moving on to the article here related to Airhung, it says that the government projects that commercial passenger drone services will be available as soon as 3 to 5 years from now, which is 2023 and 2025. Therefore, another one that we have to wait and eventuate. So you have to get in early, although it's quite pricey for me. So you'll need a lot of conviction that the future is actually with these Uber type drones and that people are going to be switching over to this. So the sixth stock is none other than Palantir Technologies, ticker symbol PLTR, and this is one of the newer stocks that I've just finished building a position in. So looking at the charts again, it had a 52-week high of $45 in the 6 months, and we can see that it was also sold off recently by over 40%. So moving over to this article, PLTR stock forecast. Now I've already discussed what I think about Palantir in some recent videos, but having a look at this technical analysis here of what someone has done because of the current market and its downtrend. So this article states in its technical analysis of the graph that if things continue to keep dropping, that we may see the price as low as $16. So the main reason I look at this is to also compare other people's technical analysis, to also learn from it and to see where my value range comes from. Remember that technical analysis is a lagging indicator, which means we are predicting things that will happen in the future from past results. It's a bit hit and miss, but it's always good to have a look at the levels and the ranges of where the support and the resistance lines are, so that we don't get scared too much of where it can move. So these are important because this just highlights and tells us where the ranges of the resistance and supports will be, so that we can closely monitor the stock for any issues. So one of the positives for Palantir is that ARK does hold them and has a decent amount in them, although it's only 1.19% of it, but it is their 33rd biggest holding. And moving over to market beat, one of the problems with Palantir is recently its lockup period has expired, and even though we've had a bit of a market correction in the technology center, it hasn't really helped with the insiders selling. And we can see here that 207 million has been sold in 2020 Q4, followed by 89 million in Q1 2021. And here's just a summary of the recent insider selling, which hasn't really helped. And there's some pretty big numbers in here of 30 million, 9 million, and this one right here by the CEO of $111 million sold. So my position in Palantir has already been filled, and I've got just under 250 shares in my hatch portfolio. Unless it goes significantly lower, I won't be buying any more for the moment. I'm just going to be watching it and see what happens to it. As I saw from the technical analysis, it could get down to $16, in which case I'd probably buy more then, but for now just holding on. The earnings is in May. That's going to tell us more of the story about what's happening with the company's financials. So for the seventh and last stock is TDOC Health, ticker symbol TDOC. So right now TDOC is $174 per share, and looking over to Yahoo, we can see that the 52-week high was $308 and the 52-week low is $135. So at the price point right now is pretty much a good time if you like the stock to be buying it, because it is under the 50-day moving average and also below the 200-day moving average. So TDOC is a leader in telehealth, and also they've just recently acquired Livongo. So we can see here that the ticker symbol LVGO is last traded on October 29th. That stopped on November 2nd, 2020. And what happened with that is that after the merger, Livongo stock moved in with TDOC. So now shareholders for both companies can find the stock under TDOC. So reading here, shares in TDOC Health and Livongo Health fell sharply on Wednesday after the two tech-focused healthcare companies announced their plans to do a merger. So even though both the stocks went down, I think at the current price point it looks very appealing, because I think it's going to come back up again after the sell-off and stability comes back to the market. We can see here the earnings are forecasted to grow at 60.8% per year. So TDOC has a good year-on-year growth, and one of its biggest benefits of owning the stock is it's actually got 82% of institutions that own it. So to me, with such high level of institutional ownership, it is very much unlikely to to go bankrupt with such large backers. So while I think they will dominate the telehouse sector, their profit margins are minus 44% and they're not expected to be profitable till 2023. So there is some bad side to the stock. Right, so my final thoughts is that I feel like people are rotated away from growth stocks and started to reinvest their money into value stocks and large cap companies as well as the bond market. But in saying that, some are starting to have a look at growth stocks again as they have started to come down from their all-time highs. You can see this from Tesla, down from all-time highs of $900, in PLTR, which is down from $44, and also NIO, which is down from $66 to its current price of around about mid-30s. And I did find this article here that states that there could be some light in the month of April for us investors. So looking into the future of this month, I'll just continue doing my research on the companies that I have, wait to see how long this downtrend continues. But like all things, downtrends don't keep on going forever, and eventually the prices will come down to something more attractive, in which case investors will start coming back into again with their favorite stocks and will bring the market back up. However, it's still a volatile month going into April, or being in April. I do think that we are starting to see a little bit of the bottom, because I see Tesla now start trading sideways around between $600 and $650. So I'm really starting to look closely at Tattooed Chef, but also I find it interesting with those eVTOL stocks, with the Uber flying machine stocks. But for me, with those flying drones without a product and income and revenue till 2023, 2024, it's too risky for me and I can't wait that long, although I do find them interesting. And for those that haven't seen me before, hello, my name is Gifford, and I use this channel to document my journey in the stock market as I try to figure out how to be financially free. The trading app I use is Hatch Invest and Sharesies, and both of these are New Zealand platforms. And if you want to start your own investing journey, feel free to use my referral codes if you're in New Zealand. Well, that's enough for me today. Thank you for watching. As always, make sure you do your own due diligence in the stocks that you buy. If you come up with any stocks that you find interesting, do let me know in the comments. With that said, bye, and I'll see you on the next one.